Boom, 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 boom. And we are live. Yo, what's up, guys? Welcome to another Rebels Capital, aka Connectivity with Success. And yes, welcome to another day of talking about the stock market, just to simplify it for everyone to understand. Yeah, man, if you like the video, please click like, subscribe. Yes, no, maybe so. Let's go, let's go, let's go. So today is the 18th of June 2026. So already halfway throughout the year. Shit, man, time flies. Yeah, man, what's happening today is that the stock market is rebounding from Wednesday's Fed-driven sell-off. And yeah, man, the markets will be also closed. The U.S market, to be specific, will be closed on Friday because of a public holiday. It'll be back on Monday. So yeah, man, as you can see here, the Dow Jones is up, the DAX is up, Nasdaq 100 is up, Nikkei 225 is up, FTSE is down, and the Hang Seng, which is the Chinese index, is down. So yeah, man, everything is just still looking good, still looking Gucci. The VIX, which is the fear symbol, which shows that if there's some sort of selling going on, it's down today. As you can see here, it's playing at 16. So the usual price, which means that people are not selling. So yeah, man, there's no recession or anything of that sort happening. Everyone is still Gucci, everyone is still happy. That's what's been happening here, as you can see. Let's go back to, let me jostle into the Federal Reserve, right? Wait, let me get that index. Where is it now? Give me a second, give me a minute. So here, it's normally here at the economic calendar. My shit is loading slow. I just want to show you the actual rate. There we go. We had retail sales. So as you can see here, the Fed decision yesterday came in at 3.75. So yeah, man, as we predicted, it was the same. So it removed all bias from the statements. So the new statement is just a few words, bro. The guy Kevin Warsh. Let's go to him, bro. Let's actually go to his video. And then just look at the first 30 seconds. The first like 1 minute, 2 minute. Kevin Warsh. Let me get into Kevin Warsh. So yeah, man, it means a lot of things now. So the sentiment has changed overall. What you call this? Fed meeting, right? Just to get a summary, right? Like a 2-second thing. I'm just going to go to him for like 2 seconds. So this is the new Federal Reserve. Anything he says, it moves the market for the whole month. I wish I was capping. People move their money according to what this guy says. But yeah, man, let's just hear for a second, and then I'm just gonna translate what that means. Having a fucking good day, bro. It moves.
Good day. It's an honor, a true honor to be back at the Federal Reserve and to take up this duty at a time of such consequence. I've been especially heartened by the warm welcome of old friends and new colleagues both. And I've listened closely to my fellow FOMC members, heard a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5% to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something: a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own, consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately, propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Howard Schneider.
That was it. Yeah, man. Kept it sweet, short, and simple, actually. Since now, at 3.75%, right? What that means is, for investors in overall, what that means is the rate cut is not happening. So people are expecting the 3.75 is going to go to maybe like 2.5 or 3%, right? That's not happening. So that is dead for 2026. A rate hike, meaning that it's going to go to another 4%, could come in as early as September. And the war between U.S. and Iran shook the inflation to above that 4%. And the Federal Reserve is just basically responding. And yeah, man, we've been high for too long, right? This guy is saying that it's just accommodating what's happening. It's just making matters even worse. And as well as companies and stocks that are going to get affected is growth stocks. Growth stocks are like companies that depend on investors and speculation. So companies that you see on Reddit and stuff like that go up without actually making a profit, that's dead. Cryptocurrencies, dead. Gold, dead. Meaning that all these three sectors are going to go down so badly this year because of that news alone. And what is people are still going to flock to the dollar, right? People are going to still keep buying the dollar. As you can see here today, the dollar now went from $99 to $100. Currently sitting at $100. That's what that means. Meaning that the dollar is still regarded as a safe haven and short-term bonds. So the 5-year and the 2-year are still going to go higher, right? That's what's happening right now. That's what that means in overall. So growth stocks are bad for you. Yeah, man, growth stocks. So things that don't make money, but they just operating based on an idea. like your SpaceX's, not the SpaceX, but like astrospace, like your space companies, biotech companies that basically invest. You just keep investing in it and you keep buying the stocks. That's dead. Cryptocurrencies like Bitcoin and Ethereum and gold. So those three, like, you're still gonna see so much decline until September. That's what that means. Federal Reserve speech. So today is the 18th, right? The biggest winners we got was Intel was a big one today. Micron was the second one. AMD, right, was the third one. And Broadcom was the fourth one. Delta Airlines was the fifth one. And RCL Cruises was the sixth one. And the biggest losers today was SpaceX. That was the first one. I don't know why. It's just basically like a pullback after the debut. Cause like, yeah, man, a couple of people, you'll be very scared to know how many people hate Elon Musk, bro. They hate that guy. I don't know why. I don't know what he did, but they fucking hate that guy. That's why they just short in the company. And then Pfizer, which is the second largest. No, it's kind of not the second largest. It's one of the largest pharmaceutical and drug company in the entire world. It went down today because of the CFO stepping down this coming summer. Apple was the third one because of Intel won a contract with the government. Yeah, Trump made a deal with Intel in terms of getting a government deal. TMC went down because of the pressure on the chip space, right? So they have too much demand and they can't fulfill it. And then the fifth one was Netflix. It went down today because of Fed speech with the growth stocks dying, basically. Yeah, that's the reason why. And then the last one was the sixth one is BMW. BMW today is down because of they are cutting their 2026 outlook, meaning that they don't project them making more money this year. And then there's less demand in China, and obviously the U.S. and Iran disruption as well kind of affected their sales as well. So yeah, man. So that's what happened. That is what's happening today. That's the biggest winners. The biggest winners now is Intel. It's at 130 Intel. So yeah, man, everyone knows Intel because of that. It has a couple of laptops where they have the ticker on it. So yeah, man, they made a deal. Just to basically summarize, after Trump said Intel has agreed to a deal with Apple to design and build chips in the United States. So yeah, man, they are supporting that Trump analysis. He said that on Truth social media. This guy moves. Trump is the only president in the entire world who moves the stock market from one tweet, bro. The only guy who can do that. And then on to commodities. So far we have gold recovering actually. Funny enough. Yeah, gold is recovering, but it's actually dead. It's slowly recovering, but it's dead. It's down 2% today. And silver is down, copper is down, palladium is down, oil is down finally. Oil WTI is down, natural gas is down. No, natural gas is up actually by a couple of points, by 0.57%. Heating oil is down. US coffee is down. US corn is down. US wheat is down. US sugar is up 0.51. And then US cotton is also down actually. Cotton is down by 0.5%. And US cocoa. So those commodities, like I said, yeah, man, hot metals are getting hit hard. So yeah, man, that's what's happening there in terms of commodities. And then if we move on to the crypto bros, I'm just gonna show you literally after that what happens in the stock market. Yeah, man, it trickles down basically. It's like a trickle that happened. We have, you see, Bitcoin is down, Ethereum is down. The only one that's up every time these two are up. And then we have Bitcoin Binance is down, USDC is up, XRP is down, Solana down, Tron down, Hyperliquid down. The only winner today in cryptos was Stellar. There's some sort of yeah, man, that's the only thing that made a big comeback. So yeah, man, this basically sold off because of the Fed speech. It was very bearish for cryptos. So yeah, man, we are seeing that even falling, dude. And then like I said, hit. And then the other thing is currencies. Currencies are gonna be higher because of the stronger dollar today. Anything dollar related is gonna be higher. Yeah, man. So the dollar now is at the strongest. It's at the highest, basically, it's ever been. And yeah, man, it's a sad thing, man, to see. But yeah, today. So the short-term bonds that are up is the small-term ones. Let me see here. So yeah, man, the 30-year is down, the 10-year is down, the 5-year is down, the 2 years, yeah, but I think we'll just have to give it some time. And then moving to your economic calendar, today we have news from import prices. So that was positive today, came in at 1.9. Weekly jobs came in at 226,000. Let me just show you here. So we are here. Let me show you here. So yeah, as you can see here, initial jobless claims came in at 226 versus the forecast of 225. Fed manufacturing index came in at 10. So everything is still fine there. Then we have storage came in at 73 billion versus the forecast of 80, which is not bad. Yeah, man. Then moving on to a few things. Let me see. So the thing that moved today was a few things insider buying and selling today. Never heard of these companies though. Today's the 18th, right? Let me see. So Perishing Square is that popular guy in Wall Street, Bill Ackerman. He bought stock for $70,000. And then here you just see a couple of people buying energy companies. So like energy. And then yeah, man, that was about it in terms of the day before the actual speech. And then the only thing that purchased was a Chinese company called here, Gold2, which is an education. It's an education. Let me show you here. educational stock. This one I bought it years back. Then I sold it. Didn't make any profit. Then it went to, I think 20. And I think 20 because of Trump came in at that time. That's when Trump started going in. So yeah, man, Goku, here's it here. It's at $1.70. It's up 3% because of, yeah, man, the CEO is buying. Yeah, the CEO bought close to $100,000 worth of stock. He's positive. He's positive there. Yeah, man, that's about it in terms of buying and selling and economic calendar. Let's see if I missed anything. Yeah, man. So we covered the biggest winners and losers, the Federal Reserve, just to make it simple. And yeah, man, that's about it today, the 18th of January. Just to summarize the big picture is that what's going on is that Trump signed the deal, like the peace deal with Iran, to reopen that biggest oil route, and then oil is basically going down, and then your stocks like your airlines, right? Airlines, cruises, tourism in general is going up. All the stocks that have to do with tourism, like your airplanes, your cruise lines, and tourism related, is going up. And then, yeah, man, Kevin Walsh he just said there, no cut, a rate hike basically by September. So that is killing cryptos, and so basically killed the crypto and the gold. What you call this? Bullish momentum. Yeah, man. So because now the stock of the actual cost of living, if you might actually consider it. Yeah, and then the big news was just that Intel and Apple and Nvidia will manufacture chips with Intel in the United States. So yeah, man, they just gave Intel a big boost there, bro. They just gave him a love line actually. That was weird, dude. What did he do to get that? The government is just helping him to make $1 billion, bro, in Intel. And then yeah, man, that's about it. If you like the video, man, please click like, subscribe. Yes, no.